So the topic is today's session is accounting modeling financial functions. So use of financial functions in accounting modeling. So these are the areas we are going to discuss. Computation of net present values, right? NPV with regular cash flows, NPV calculation with irregular cash flows. Then we will discuss IRR or internal rate of return for projects with regular cash flows and computation of IRR with irregular cash flows. Since you have already discussed the concept of NPV, IRR for your management accounting, financial management, we are not going to discuss the theoretical aspect of NPV and IRR. You know, there are different approaches to evaluate project financial feasibility. Right, so all these NPV and IRR are popularly used by managers to evaluate financial feasibility of a capital investment or of a project. You know, when it comes to evaluate the viability or the feasibility of a project, there are different aspects to be considered. If you are going to invest in a big project, like a project, let's say a power plant project, there are a lot of feasibility studies you need, right? You are supposed to perform. For example, environmental feasibility, social feasibility, technological feasibility, the market feasibility, right? In addition, financial feasibility. So accordingly, when it comes to evaluate the financial feasibility of the project, financial viability of the project, there are two different popular approaches. Discounted cash flow approach and non-discounted cash flow approach. Under non-discounted cash flow approaches, I think you have studied payback period, accounting rate of return, considered as some popular techniques used as non-discounted cash flows. There we do not consider the time value of money and the risk of the project is ignored. So accordingly, since you do not consider the time value of money and since you do not consider the risk of the project, those methods, that means the payback period method and the accounting rate of return approach, or those methods not considered as the strong method or not considered as scientific method of computing or evaluating the financial feasibility. So what is considered as scientific and strong methods is the discounted cash flow methods. Under discounted cash flow method, the most powerful technique accepted all over the world is NPV, that is the net present value method. In addition, there's another method called IRR method or internal rate of return, but NPV is considered as the most powerful tool of evaluating the financial feasibility of a project. So that is the basically some aspect relating to theory. So we are not going to discuss in detail what is NPV. Actually, NPV is the difference between the present value of all the cash outflows and the present value of all the cash inflows. Right, the difference between present value of all cash outflows and the present value of all cash inflows. Right, if your project net present value is positive, it means that project add value to your business. If your NPV is positive, right, we generally consider your project adds value to your business wealth is increased, right? So if the NPV is negative, that means that your project, your intended project, if you accept, your wealth will be destroyed. Like business wealth destroy, if you accept project having negative NPV, right? Due to extremely extreme cases or extreme scenarios, sometimes managers might accept project even with the negative NPV for strategic purpose. Let's say you are going to accept a project even with the loss with a strategic purpose of right, enter into the market or get in the as a marketing approach, but you cannot sustain your business if you continue continuously accept project with negative NPV. So general rule, reject project with negative NPV, right? That's the general rule, right? But extreme cases, managed fund might consider accepting a project with a negative NPV for strategic purpose. Let's say for a political party or the ruling party has offered you a particular project. But you know, if you accept this project and do the project with right quality and the as expected by the managers or the regulatory bodies, right? It might be helpful for you to win more projects in the government sector in the future. So accordingly, due to this, so that means some strategic purpose, you might really accept project with negative NPV, but general recommendation, you should not accept NPV project with negative NPV. So that is the theory. So we'll have a simple example. So this the activity simple. There's a simple example. Activity number 1. The following information is given for an investment. So this information is related to particular investment. Let's say initial cost take 10 million. Annual net cash flows. Annual net cash flows. Let's say net cash inflows. Yeah, net cash inflows is are given like this. Year 1, end of year 1, 3 million. End of year 2, 4.2 million. And year 3, it is 6.8 million. And you know, in the context of project evaluation or the capital budgeting or NPV calculation, it is generally assumed all the cash flows are occurred at the end of each year unless there's any contradictory information. If there are no contradictory information, it is generally assumed all these cash flows are occurred at the end of each year. That means this 3 million has occurred at the end of year 2. This 4.2 million end of year 2, 6.8 million end of year 3. This 10 million, that is the initial investment that is expected to be invested right now. So accordingly, initial investment means the investment you are supposed to make at the beginning of the project, that is year 0. 0 means right now, right? Then this is the discount rate. Usually this is discount rate means, you know, it is the cost of capital of the project. So let's say cost of capital 15% required. Find the net present value of the investment. Write a formula to display the appropriate decision based on NPV. Okay, Lamai, let's now see how to compute NPV without using finance function. There's a finance function. Right. There are some formulas, inbuilt formulas for you to easily compute NPV. But without using those formulas, let's compute NPV using our ordinary knowledge, or right the way by using the Excel, right, the way we use in our manual computation. So how you compute usually this NPV, right? So we'll say year and net cash flow and discount factor and present value, right? So here we'll say 0, 0, 0, year 1, year 2, year 3, and net cash flows 10 million, and would have taken these figures to our problem getting that. So not to worry, we'll take have a look at and take the figures, right? So 3 million 4.2 6.8, 3 million 4.2 6.8, 3 million 4.2 6.8, So these are the information, and this is the initial investment that you all know. And discount factor. How you compute my discount factor? Discount factor is equal to 1 divided by. So we are not going to apply the given information as inputs, right? So 1 divided by 1 plus R, do you know, right? 1 plus R means R is 15%, that is given in your question. Here 15%. I use screen share as a chat. Yes, good, right? It's 1 plus R to the power n. So accordingly, 1 plus R means 1.15 because our rate is 15%. So I'll use to the power. We'll put to the power like this. Then it is 1. Then you can easily copy like this, and you can increase the decimal places like this. So this is your discount factor, and percent value is equal cash flow times discount factor. So very easy. Then you can copy it to other areas. So you can get the sum. I will put alter equal, enter. This is your percent value. This is your percent value. Not percent value, this is your net percent value. Okay. This is how you compute net present value, right? Using our ordinary calculation approach. And if you want to get the recommendation, let's say we want to get the recommendation. So we can say, we can use a if function. Let's say if this particular value is greater than or equal, 0. 0, it's, so we put the greater than or equal 0. If value true, we say accept the project. Accept the project. Otherwise if it is not true, means what? If it is not true, it means it is negative. Then we'll say reject. If E7, yes, E7 can mean the E7 can mean the E7 value බින්දුවට වඩා is greater than or equal to 0, that means a positive. Then say accept, otherwise reject. Right? Say okay. That's an error. Yes, right? Okay. So these are decision. Right, so let's say we'll increase our initial investment by, let's say, another 3 million, not 3 million, let's say by small amount, let's say, yeah, by 1 million. Then definitely it should be 744,000, right? Something like that. Say here will increase. So reject no, right? Mama put a value. Initial investment value minus value, then it will be minus. Yeah, you can see decision come as reject. So how we did that, we'll discuss it later, right? Okay, so this is how, forget about this decision right function, right? This is how we all right usually compute our NPV. But there's another approach of computing NPV. There's an inbuilt formula, right? This is our ordinary approach. So using finance function, how to compute. So let's take the same information. Let's take the same information like this. Let's say we want to compute NPV. Right? Okay. Right, Lama, here we have inbuilt formula to compute NPV. So what is the formula? You can say start writing formula with equal sign, then say NPV. You can see here NPV is there. Click on this, right? Then you have to give the rate. First, these are the variables we are required to put. One of the variables rate then values like this, right? එතකොට මේක අපිට rate එක දෙන්න ඕනේ. So you need to take this inputs. අපි අර traditional development format එකට යමු. මොකක්ද අපි format එක inputs and output recognize කරගෙන this your outputs. Then here you have output, and other than this information and the inputs you have get cost of capital, project cost of capital or whatever, right? Or the company's overall cost of capital. You can apply company's overall cost of capital to evaluate this project if this project risk is more or less equal to the existing business of the project, existing business of the organization. It's a theoretical part, right? The company cost of capital එක ගන්න පාවිච්චි කරන්න පුළුවන් අලුත් project එක evaluate කරන්න මොන තත්ත්වයක් කරතේද? අලුත් project එකේ risk එක company දැන තියෙන business risk එකට බොහෝ සෙයින් සමානයි. right? ඉතින් අපි ඒවා අපිට නම් වැදගත් නැහැ. project cost of capital හරි මොකක් හරි rate එකක් දීලා තියෙයි. let's say rate is 0.15 as a percentage is this much. So accordingly we will now go to the formula equal, let's say NPV on this. Then if you wish you can go to this, then it will be very clear and visible. So give the rate, this is your rate and the values, right? So you can give, so what are the values? These are the values. You can give these values, right? There's a problem, but it's still, so these are the values you have. Then say okay. What is the problem? This time, according to this inbuilt formula approach, it is a minus figure. It's a minus figure. We'll take the original value, 10 million, right? And this is also 10 million. Right? So you can see there's a positive 2.5 million, sorry, 255,000 NPV positive. And according to our formula approach, same scenario, same input. According to our formula approach, our inbuilt formula, NPV formula approach, it is 222,000. There's a big difference. Right? Yes, that's the reason. Reason right? We made a mistake. I'll explain, right? So go back to your formula. So these are the inputs. So first you are required to provide the rate. Minimum rate, right? Where do we have our rate? Rate is here. Give the rate like this. Then when it comes to give the values, don't give the initial investment, because so our formula recognizes this initial cash flow as year-end cash flow. මේ formula එක recognize කරන්නේ, inbuilt formula එක recognize කරන්නේ this one as year-end cash flow. So accordingly, take it as a separate one, right? So accordingly, except initial investment, give the rest of the cash flows under values. Value 2 you can ignore, right? No need to worry about value 2. Under value 1, give only the cash inflows other than initial investment. Year 0 initial investment right? Other than year 0 cash flows, all other cash flows should be given. Let's say year 1 there's another minus figure, it's okay. Except year 0 cash flows, all other cash flows should be selected, right? Then you can come here. Right? Then from this you can minus. One minute, right? Okay. Mistake now. Okay. What the mistake this one? Okay, as values, you should give this one, right? Then say okay, right? Then it's like this. Then from this, check it. Yeah. Then separately incorporate initial investment. Separately incorporate initial investment as a minus figure, right? Then click OK. Why there's a positive figure? Because minus figure I ended as minus, so you can add because this is minus figure, right? Enter. You can see now it is equal. So this is the way we compute manually. This is the way we compute manually, and this is the NPV according to our manual approach, our usual traction approach. And this is the NPV, same NPV gotten according using the formula. I'll again explain, right, how to use put types equal sign, that is usually we put at the beginning of signing, right, type in any formula equal sign, then NPV, click on this NPV, then go to this dialog box and show the rate, and give the values. When it comes to give the values, it is very, very important. Give the values except the cash flow in year zero. Except year zero cash flows, you have to highlight all the other cash flows. Then say okay. Say okay. Right? Now you have not yet considered this. That's an answer, but this is not correct. Why? You have ignored initial outflow. Now incorporate initial outflow. Initial outflow, since it is a minus figure, you can add initial outflow. That means you are really deducting initial investment like this, then and say enter. You can see you get the correct answer. So this is the way of computing NPV using inbuilt formula. And if you want to get the decision based on the decision criteria, project is accepted if the NPV is 0 or positive. But why do you accept the project when the NPV is 0? Lama NPV 0 ki di project ek accept karna because project has yield this return. NPV 0 karla tiyenne, right? By generating this much of return, a project cost of capital එක generate කරලා තමයි NPV 0 කරලා තියෙන්නේ. Project cost of capital කියලා කියන්නේ තමයි company's point of view, project cost of capital, investors point of view, required rate of return. Company cost of capital කියලා කියන්නේ investors ලගේ ගෙවන payment එක. Company's cost of capital කියලා කියන්නේ company the cost paid to the capital providers. So company's cost of capital, on the other hand, investors required rate. එතකොට මේ business එක invest කරලා තියෙන shareholders are required rate 15%, and the shareholders have right expected 15% from their capital, and project has generated NPV of 0, right, subject to 15% cost. It means project has already generated 15% return. If the NPV is positive, it means project has generated a return more than shareholders expected, right? If the NPV is positive, it means project has generated a return which is more than shareholders expectation. That's why obviously we accept if the NPV is positive. If the NPV is 0, it means project is does not destroy the shareholders' wealth, but it has secured shareholders' wealth, generating the required rate of 15%. That is theoretical part, right? Okay. So decision එක අපි කොහොමද ගන්න? අපි දන්නවා decision ගන්න if function අපි decision එකක් ගන්න rule එකක් ගන්න පුළුවන් if this result එක, if this particular result is greater than or equal, right? If this is the case, then give this result. If this is greater than or equal, say accept. Otherwise means it is negative, then say reject. Autocorrect if C20 is greater than or equal. Then explain that was at the yes, greater than or equal what? 0. Right, okay. Right. So these are our decisions. Right, if you know, if you want, you can apply that tool buttons neither. Spin buttons, scroll buttons, and increase this project cost of capital that you all know, right? Can increase decrease capital balance one. Scenarios, right? Okay, so this is how we can compute NPV, right? Now here the cash flows are regular cash flows. Why do we say regular cash flows? Under regular cash flows, we assume all cash flows are occurred at the end of each year. That is not really realistic, right? But it is assumed in financial management. If there are no other contradictory information, we assume cash flows are occurred at the end of each year. Year one means end of each year one. Year two means end of end of year two. Year three means end of year three. But sometimes these cash flows, you will be given exact days of these cash flows based on the contract with the customers, contracts with the suppliers, contracts with the regulatory authorities. You may be able to specifically mention this is the day on which we expect this cash inflow. This is the day on which we expect cash outflows. Right? Let's say right accordingly, the managers have been able to forecast the cash flows on a particular specific date instead of saying year one, year two, year three, 1st of March 2023, right? 30th September 2025 on a particular day. Then cash flows are not regular. Cash flows regular na. Irregular unot අපි කොහොමද compute කරන්නේ? Let's consider another example. Right, this I explained already. NPV with irregular cash flow. So this is an example, right? The following information is given for an investment date 1st January 2022. Ekane අවුරුද්දේ අපි හිතමු මේක ඕන 2023 ගමු. Next year beginning. No need to change, right? We'll go ahead like this as it is. Let's say 1st January 2023, 2022, we have estimated, we are planning to invest 10 million. Then March 2023, 2.75, 30th October 2023, 4.25, February 1st, 3,250,000, and 1st April 275,000. So these are the future expected cash flows. In a scenario like this, it is very difficult to compute the NPV according to manual method. Not very difficult, right? It is possible, but not easy. We'll see how to tackle this scenario based according to traditional manual approach. අපි මේක ගමු මේ scenario එක මෙතෙන්. Okay, so these are the information, right? In addition, we'll take this. Okay. Take it here. Format. Okay. පොඩි පැටවිල්ලක් ගියා right පොඩ්ඩක් ඉන්න. We'll take another sheet, right? Formatting එකක් ගියා. It could happen, right? Okay, here 18 insert. We'll take the figures from the sum here. Okay, then we'll take format control 1. Okay, correct. Right. So if we compute this project NPV and we'll put the cost of capital as is our input. Cost of capital we take as given in the sum, it is 10%. Okay. This 0.1, 10%, and as a percentage 10%. Okay, right. So how we compute the present value using our traditional approach, our manual method that is ඔයාලා කඩදාසියක හැදුවා කොහොමද හදාන්නේ, right? Here instead of here we have the date and the net cash flow, then discount factor and present value. Same approach, right? Discount factor, present value. You know the right the initial investment and initial investment එකේ discount factor ඔයාලා දන්නවා because 1 plus discount rate to the power in 0 because time point of time 0, then is 1, then present value is equal initial cash outflow times discount factor. Okay. Okay, then when it comes to this 275,000 discount factor, how we compute? Again, equal discount factor is equal 1 divided by 1 plus R is here, close the bracket, to the power. Then to the power then no. To the power here. එකද දෙකද කීයද? තමයි දැන් මෙතන 0 නම් January 1st 0 නම් 2022 January 1st 0 නම්, right? This particular March 1st වලට අවුරුදු කීයක් තියනවද? අපි පව එක දාන්නේ number of years දාන්නේ, හරි? එතකොට 2023 first එහෙම නැත්නම් 31st December 2022 එහෙම නැත්නම් 1st of January 2023 වලට අවුරුද්දයි. මෙතන තියෙන්නේ 1st March. ඒ කියන්නේ තව මාස දෙකක් තියෙනවා. තව මාස දෙකක් ගිහලා අවුරුද්දයි මාස දෙකක්. එහෙමනේ. මේ cash flow එන්නේ අවුරුද්දයි මාස දෙකකින්. ණය ඩිස්කවුන්ට් කරද්දී එන්න ඕනේ n කියන්නේ එක නෙවෙයි 1 point something. එතකොට අපි ඒක හොයන්න ඕනේ. අපි ඉතින් පොඩ්ඩකට මෙයා මේ හරියට රිෆර් කරමු. මෙතන රිෆර් කරලා දීලා තියෙනවා. හරි? එහෙනම් මෙතන අපි දැන් බලමු how many years ගාන කීයද? years ගාන සමානයි අවුරුද්දයි. අවුරුද්දක් ෂුවර්නේ. ඇයි අවුරුද්දක් ෂුවර් වෙන්නේ? 2023 එක්කෙනා present value එකට යද්දී අවුරුද්දට වඩා වැඩිපුර පස්සට ඇදගෙන යනවා. හරි අවුරුද්දෙන් මාස දෙකක්. first මාර්ච් කියලා කියන්නේ ජනවාරි ඉවරයි, ෆෙබ්‍රුවරි ඉවරයි. ඒ කියන්නේ අවුරුද්දකුත් මාස කීයද 12 බෙදීම 2 බෙදීම 12. So this is our number of years. අවුරුද්දයි මාස දෙක number of years වල මෙච්චරයි. එහෙනම් අපේ discounting factor එක කොහොමද වෙන්නේ? discounting factor එක අපි කියන්නේ how do we compute discounting factor 1 divided by 1 plus r to the power n. n වලට අපි දුන්න රිෆර් කරේ. මෙයාගේ n වලට අපි රිෆර් කරේ. අපේ n වලට රිෆර් කරේ මෙන්න මෙතන n එක. එතන n තියෙනවා අවුරුද්දට වඩා වැඩි. n1 නම් 1 year 1.66 something නම් more than 1 year. So this is our discount factor, right? So we can decrease our decimals to this. Then for this again 20th right 3 October 30th October කියලා කියන ළමයි කොච්චර කාලයක්ද 30th October වලින් ඉඳන් මේ බිඳුවට ඒ කියන්නේ 1st January වලට කොච්චර කාලයක් තියෙනවද අවුරුද්ද මාස 10ක් අවුරුද්ද මාස 10ක් තිබේ එමුනේ 2022 January 1st වලට මෙතන තියෙන කාලය right October 30th means 10 months completed. So accordingly 1 year and 10 months අපි ගමු equal 1 year plus divided by 10 months right 10 months divided by 12. So this much of years are there. So accordingly how do you compute the discount factor? Equal 1 divided by 1 plus discount rate. අපි දැන් කොපි ගන්න පුළුවන් ෆෝමියුලා හරි අවශ්‍යයි. discount rate to the power this. So this is our discount factor. Discount rate. Sorry, not discount factor, may rate discount factor in නැත්නම් percent of interest factor. Right. For this one, February 1st means 2 years and 1 month. 2 years and 1 month. අපි මෙතන දාමු this equal 2 years plus 1 month තියෙනවා. 1 month එක years කරන්නේ කොහොමද? 1 divided by 12. අනික ගමු this one 2024 April 1st. April 1st කියලා කියන්නේ එතන මාස 3ක් complete. April ගන්න බෑ April 1st නිසා. January, February, March 4 month completed. 4 month completed. ඊට අමතරව 2023 full year එකයි 2022 full year එකයි 2 years and 4 months. අපි එකක් බලමු 2 years plus 4 month. 4 month අවුරුදු වලට convert කරන්නේ 4 months divided by 12. This is in terms of number of years. So we can copy this to down. Then why we can't copy? Because this particular rate has not been fixed by pressing F4. Now we can copy. උගන්නලා තියෙන right ආපහු කිව්වොත් copy කරලා ගන්න පුළුවන් right කොහමද 1 divided by මෙහෙම යන්න පුළුවන් 1 plus r කියන මෙතන අපි එයා වුණා fix කරමු f4 ගහලා close bracket ඊට පස්සේ to the power අපි මෙතෙන් දෙනවා fix කරන්න නැතුව relative cell reference එකක් දෙනවා enter ඊට පස්සේ අපිට එතනින් එහාට මේක delete කළොත් නම් copy කරන්න පුළුවන් මේ formula එක that we all have already discussed right these things okay then the present value is very easy you can copy this to down right simply by clicking or for the basic concept මගහරිනාට කොහොමද අපි හොයන්නේ මෙහා සමානයි discounting present value interest factor එක එහෙම නැත්නම් discount factor multiplied by the cash flow right then you can copy simply go to this particular small plus mark and double click then it is done right so then you can compute the present value NPV like this so this is our NPV using traditional your manual approach manual තමයි අපි ඉතින් මේ excel sheet එකෙන් කරත් right ඊට manual කරන method එක අපි excel එකෙන් කරා we will now see how we could use inbuilt finance formula to compute NPV for project like this or project with irregular cash flows like this. Irregular cash flows තියෙන වෙලාවක ළමයි අපි කොහොමද NPV compute කරන්නේ? Very easy. අපි බලමු දැන් using finance function. Finance functions වලදී අපි බලමු කොහොමද NPV compute කරන්නේ. NPV compute කරමු අපි. Let's compute NPV using the inbuilt formula. Right. If the project consists of irregular cash flows, you cannot compute ordinary NPV. For that purpose, we have XNPV. X is special kind of project. That is project having irregular cash flow. So we can compute, instead of NPV, we can compute XNPV. XNPV means same NPV, right? The concept of NPV same. Why do we say X? Because project having irregular cash flow, so that we need to have different kind of formula. Excel has differentiated ordinary NPV calculation with irregular cash flow NPV calculation. Is that particular formulas differentiated by adding X here. So according same NPV, right? X NPV, just click on this and go to expansion mode like this, then give the required information. Lamai, when it comes to compute NPV with irregular cash flows, it is very easy. Give the rate given in the given in the question, then give the values. Now, unlike in the previous case, in the previous NPV calculations, we did not give initial cash outflow as values. We give except initial cash outflows, all other cash flows were highlighted. But here for XNP method, you just give like all the cash flows, like this. Then do the dates. Like this, then say okay. Approximately you can see there's a slight difference. It could be due to the rounding error effect. Right, 1 minute to again check. Minimize, decrease the. So there's a considerable difference, right? January, March, okay, 1 year and 2 months. Here 1 year, okay, divided by 2. Okay, whether this is required. There's no impact, no? Calculations will automatic. Order එකක් තියෙනවනේ ගන්න parentheses, subtraction, deduction, multiplication. Difference එකක් තියෙනවද කියලා බලන්න. There's no impact, I think. Seems correct, right? No problem in this. Simply write 10%. We give all the values like this. Then the dates should be like this. Then say okay. D2 correct, that is the interest rate, then the values here, sorry, values are here, then the dates given here. Then say okay, right? You check here, 2 months, 1 year and 2 months. Yes, March 1st means 2 months gone. Here 30th October, November, December, 10 months gone. So 10 divided by 12, correct. Here it is 1st February. 1st February means 2 years and 1 month. 2 years and 1 month. Yes, is correct. Here it is again 2 years, 2022, 2023, 2 years and 3 months completed. Here the mistake. 2 years, 2 years and 3 months completed. I have put here 4 months. There are a mistake. Right, okay. Now it is almost correct. There's a slight difference due to rounding effect, right? Now this is acceptable. Okay. So this is how we compute. If you are going to compute your NPV using this traditional approach, right? Using this table traditional approach, it is not easy, right? And you can easily compute NPV using this inbuilt finance function very conveniently. Especially this very convenient if you are going to compute NPV for projects with irregular cash flows. And this is how we compute NPV with regular cash flow. So again, I show you how to compute NPV for project with regular cash flows. Type XNPV, click on this and go to this expanded dialog box, then give the required information, rate like this and values like this. Very simple, give all the values, unlike the ordinary NPV calculation. Give all the values and give all the dates, then say okay. So it's very simple. Right. Then decision rule, decision rule. Decision, how we get the decisions? Say equal if this particular cell value is greater than or equal 0. If that's true, say accept. If it's true, say accept. Otherwise, say reject. Is this to, let's say 20%? Cost of capital increase 20%, then NPV minus, then right, it is rejected. Okay. Right. Next one. Internal rate of return, right? So internal rate of return. So that is another approach to evaluate the financial feasibility of a project, right? So in IRR means project rate of return. The project yield is represented by IRR. I mean, if you invest in the in an FD, that FD gives you a particular interest rate as the FD return. If you put your money in the share market, it gives you return in a particular return. That is the return on your investment. If you put your business, put your money in a particular project, particular business, that particular business gives you a particular return, right? So that return is represented by that particular company's, that particular project's IRR. So project IRR means its return to your business. It's return to your business. Let's say particular project IRR is 20%, right? Particular projects, you compute the IRR and you found it to be 20%. And as the investor, your required rate of return or your project cost of capital is, let's say, 18%, right? Your project cost of capital. Cost of capital means the cost of the source of capital, and you computed 1 rupee costing 18%. By investing these funds with a cost of 18%, your project has generated 20% return. So do you accept that project? Yes, you accept, because your required rate, project cost of capital is my company required rate. Project cost of capital, it may be the firm's cost of capital, right? So if it is 18%, it means that is the required rate. Because cost of capital from the company's point of view, from the investor's point of view, it is the required rate. So accordingly, if the project cost of capital is 18% and the project IRR is 20%, it means your required rate is 18% because your cost of capital 18%, but your project gives you 20%. While 18% බලාපොරොත්තු වෙද්දී 20% දෙනවා කියන්නේ ඔයාලා අමන්දානන්දයට පත් වෙනවා. Right? අමන්දානන්දට ඕනේ නැහැ, right? Your required rate is 18% and project return is 20%. You are happy. You are right. You are happy to accept the project, right? So according, that is the theory part. And there are different approaches to compute the IRR. So accordingly, simply the technical definition of IRR is what? IRR is the what is the definition? IRR is the discount rate at which NPV becomes zero. IRR කියලා කියන්නේ ළමයි, it is the discount rate at which project NPV becomes zero. Project එකේ NPV එක zero කරවන IRR එක තමයි අපි කියන්නේ මොකක්ද project එකේ NPV zero කරවන IRR නේ project එකේ NPV zero කරවන cost of capital එක එහෙම නැත්නම් discount rate එක තමයි අපි කියන්නේ IRR. So according here, you are given an activity. Following information is given for an investment. Initial cost is given, in annual cash flows are given like this, and so we'll see how to compute the IRR for this cash flows, right? So accordingly, information right? Okay, so we put information somewhere here and net cash flow and income factor percent value. Year 0, 1, 2, 3, 4 and 5. Net cash flows 70 million. I'll put okay 70 million down, 70 million. That is minus, then cash inflows 12 million. 12 million and 15 million and 18 million and 21 million and 26 million. Right, so these are the cash flows. Now this is not needed anymore. Then interest rate of now WACC or weighted average cost of capital, how much is not given. Compressed cost of capital is not given. It is needed for making decision, right? So let's assume cost of capital is 12%. Let's assume cost of capital is 12%, right? %. Vartamana Galapena, Dam 18%, right? 18%. Right. Okay. Cost of capital like 18%. Right. So discount factor is equal 1 divided by 1 plus discount rate, and I'll make fixed by pressing F4. F4 close the bracket plus this and F4 close the bracket to the power n. So you can do it like this and decrease the decimal places to this, and percent value is equal to this time this. So this NPV subject to the firm's cost of capital, right? It is minus. It's minus, right? Okay, so let's see how to compute IRR using finance function. Now, there are different approaches to compute IRR, right? According to manual approaches. I'm not going to compute the IRR using our traditional approaches, right? IRR is the discount rate at which NPV becomes 0. There are different approaches like extrapolation method, graphical approach. At the same time, you can use formula. You can compute two NPVs, NPV at a higher discount rate, NPV at a lower discount rate. Accordingly, using that particular formula, you can compute IRR, right? But it takes time, right? So let's see how to compute IRR using our finance function, right? Internal rate of return, IRR, how to compute IRR using our finance function. So it's very easy, right? Type the formula with equals sign, then say IRR, then it comes like here, IRR, then go to the expanded mode like this. It's very simple. Give the values, right? Only you are required to show the values of the, not the percentage, right? Only the cash flows, values of the cash flows. Cash flow value tika, right? Then guess you no need to guess and say okay. This IRR internal rate of return required rate, sorry, project internal rate of return is approximately 9%, 8.66%. So this is the project yield project yield එක 8.66 එතකොට ළමයි එක relatively low return එකක් වගේ පේනවා, right? It means, what do you say, if you accept, right, if you accept the project, right, so according to IRR, so what is the decision rule? What is the decision rule according to IRR? NP wala dannawa. So what is the decision rule? So keep in mind, I emphasize again, I am not teaching you NPV, I am not teaching you IRR, right? So according, I am not supposed to discuss the what is meant by NPV, what is the decision rule, right? Nothing is possible. Our main concern is how to apply accounting modeling, in accounting modeling, how to apply inbuilt functions and Excel formulas to compute NPV and IRR. Right? So we are not going to discuss the theoretical aspect of NPV, IRR, or the cost of capital, nothing. Right? So you are supposed to have this, right? I know you have already studied this concept, right? So accordingly, what is the IRR decision rule? NPV decision rule wala dannawa, right? NPV decision rule wala dannawa. If NPV right, is NPV is greater than 0, but the accept rule accept. If NPV is less than 0, decision rule reject. We have already studied this, right? Reject. And if NPV is equal to 0, if NPV is equal to 0, what is the decision? May accept. May accept. Samana accept. Then the decision rule, and we put here decision rule with IRR. And now if right, IRR is greater than WACC, or project cost of capital, then we say accept. If IRR is less than WACC, then we say reject. If IRR equal to WACC, we say may accept. මොකදලා may accept කියන හේතුව? company cost of capital එක එහෙම නැත්නම් required rate එකයි project return එකයි සමාන. ඒ කියන්නේ required rate එකයි project return එකයි සමාන වුණාම ගැටලුවක් නැහැ. Your required rate is equal to the project rate. මට ඕන කරන එක දීලා තියෙනවා. ඔයාලා job එකට යද්දී ඔයාලට අවශ්‍ය කරන පඩිය 50000යි, company offer කරන 50000. That means required rate එකයි offer rate එකයි සමානයි. Then you accept. හැබැයි required rate එක 50000යි, offer කරන 100,000, then you are thrilled. Then you are very happy. Right? Nisa WACC එකට cost of capital IRR equal නම් may be accepted. ඉතින් හරියට මේක equal වෙද්දී මෙතන NPV 0. ඒකෙදිත් කියන මොකද්ද? may be accepted. Okay? Right. එහෙනම් decision rule එක අපි දාමු. decision rule එක තමයි function එක දාන්නේ equal if may return may IRR එක if it is greater than or equal to what? To the cost of capital. Cost of capital. This is the cost of capital. Right? If this is the case, then say අර පැහැදිලි වෙන පේන්න මම යනවා අර dialog box එකට. මෙන්න මේකෙදි if this is the case, then say accept. accept. මේ විදිහට ගියාම ඉන්වර්ටර් කමා දාන්න ඕනේ නැහැ. නමුත් අපි ගියොත් මේ මෙතන ටයිප් කරගෙන අපි ඉන්වර්ටර් කමා දාන්න ඕනේ, right? Then reject. automatically දාන්න ඉන්වර්ටර් කමා. Otherwise if false, that means it is less than that, then reject. project එක reject කරන හේතුවයි project එකේ return එක 8% company investors ලගේ capital cost එකවත් investor required rate 18%, project return එක 8%, then project is rejected. Okay, so that's how we compute IRR. Very conveniently and very quickly we can compute IRR with finance function. Again, I will show you how we compute IRR. You type equal sign and type IRR, then that formula comes like this. Then right, show the only you are required to show the values. Okay, values investment project original cash flow pennana, then say okay, it is 8.666. I mean, how do we ensure, how can we ensure our IRR is 8.666? And compute කරන්න හරියට කොහොමද අපි දැනගන්න හරියට කියලා. අපිට පුළුවන් NPV compute කරන්න based on this IRR. ඔයාලා දන්නවා මේක හරිනම් if you compute IRR, sorry, if you compute NPV based on this particular rate subject to this particular discount rate, your NPV should become 0. බලමු ටෙස්ට් කරලා. ඔන්න percentage කොහොමද අපි ගන්නේ? percentage සමානයි. Okay, undo කරමු. Discount factor දැන් අපි අලුතෙන් හොයමු. Discount factor සමානයි කොහොමද? 1 open bracket, sorry, 1 divided by 1 plus R තියෙනවා මෙන්න මෙයා. අපි F4 ගහලා fix කරමු. Close the bracket, to the power එකට අපි දෙමු. Then say okay. we පහතරලා යමු. පාර දැන් පැහැදිලි. මෙන්න NPV becomes 0. NPV එක 0. ඒ කියන්නේ මේ IR එක හරියි. Okay, second lamai, you know how to compute NPV, right? IR at the same time you know how to compute IRR, right? So we discuss accordingly NPV and IRR. Next concept, how to compute IRR for project with irregular cash flows. Irregular cash flows තිබුණාම අපි කොහොමද IRR compute කරන්නේ? අපි මේ project එක තමයි අපි IRR compute කරමු. We compute the IRR for this particular project. Okay. IRR. Division එක අවශ්‍ය නැහැ. ඔයාලා දන්නවා division එක දාන formula එක. Right. Here we can compute for irregular projects IRR වලට තියෙන special formula. For NPV නම් XNPV, for IRR ළමයි XIRR. Here. Right, then it comes the formula like this. You can go for expanded format like this. Give the required information. මොනවද දෙන්න ඕනේ? Values ටික දෙන්න. Original values ටික දෙන්න like this. Give the original values like this. Then give the dates. Give the dates like this. Right, all the values, all the cash flows and all the dates. Then say okay. 15.4. Yeah, 15.4% is the IRR. 15.4. Okay. ඉතින් කොහොමද check කරන්නේ? හරි කියලා. හරි කියලා check කරන්න පුළුවන්. අපි මේ 15% දාලා අපිට පුළුවන් cost of මේ NPV calculate කරන්න. මම ඒකට පොඩි shortcut එකක් ගන්නවා. මම දාන මෙතන cost of capital එක ගන්න කියනවා මෙයාගේ. ඒතකොට බලන්න මෙන්න මෙයා 0 වෙන්නම ඕන. හරි. අපි ඔයාලා පැහැදිලි නේද? මේ originally cost of capital compute මේ NPV compute කරලා තියෙන්නේ based on this given cost of capital එක. මම දැන් change කරනවා. මම එයාට දානවා මෙයාව. 0 වෙන්න ඕන. 0 වෙන්නේ නැහැ, approximately 0, right? ඔයාලට පැහැදිලි මේ මිලියන් සංඛ්‍යාවක් සමග මේ වගේ ඉලක්කමක් එනවා කියන්නේ approximately 0 කියන එක. So it is acceptable, right? It is acceptable. This is almost zero because figures are medians and this is negligible. For the rounding effects, may hamatani maragena. And approximately this can be accepted as zero. Don't think this is a big amount, right? No, this is a 10 million, some millions of amount order. This is a relatively here you can see here, right? You can see here this has become zero. There's a slight difference. When functions NPV has become zero. These are manual calculation. Here, based on XNPV formula, right? XNPV has become zero. That means this 15.42 is the internal rate of return, right? You know how to compute IRR for projects with irregular cash flows. So මේකට අපි XIR කියලා දාන්නේ හරි. Right? XIR කියලා කියන්නේ Excel වල තියෙන ෆෝමියුලා එක ඩිෆරන්ෂিয়েට් කරන්න තියෙන නම. But the IRR is IRR. Make it IRR. Here NPV, we never type XNPV. This is NPV. No doubt, no argument. But since there are two formulas, one formula, no change, but the other formula, we put an X in front of NPV. Because we need to differentiate two formulas. So we have NPV formula and NPV formula. We have IRR formula and XIRR formula, right? Okay. So that's about how to compute NPV and IRR. Then we have, yes, we did this as well. We have case study. We have scenario. Right? You are given this information. Initial investment to 120 million. Selling price year one. I have uploaded this slide to your LMS, right? Selling price is given. Expected selling price, inflation, demand, expected demand growth, variable operating cost, fixed cost, and the expected variable operating cost, and then capital allowance on plant, corporate tax, scrap value, everything is given, and the cost of capital, right? And project life. So using this information, compute the NPV and compute the IRR, right? So the information on NPV and IRR compute no. But before computing NPV and IRR, you are required to estimate project cash flows. Main information in project cash flow estimate right? Nisa, we'll take this to our calculation sheet, our Excel sheet. Okay, so these are the information, right? In අපි දාමු අපේ traditional method එකට අපි inputs outputs method දාමු, right? Our inputs, what are the inputs? Initial investment, I think this 120 that, right? 120 million. Right. Next one. Right. The selling price 450. Price growth 9%. Selling price 450. Price growth 9%, and the demand units year 125, demand growth 5%. Demand in 2024 කියලා අපි දාමු. 2024 වල demand එක 125,000, and the demand growth එක 5%. Then the information, variable cost එක 2,000, free from non-cash. Okay, it's okay. Variable cost එක 200, fixed cost එක 1 million. Variable cost 200, fixed is 1 million, excluding non-cash items, right? Then what is we have? Variable cost growth, capital loss 6%, 30%. Variable cost growth rate 6%. Allowance 20%. Corporate tax rate 30%. So these are the information given. Cost of capital 15, project life is 5. What are down? Cost of capital in a WACC, weighted average cost of capital, it is 15%, and project life is 5 years. Scrap value is missing. Balance scrap value is not here. Have a look at the sum. Here is there, right? Scrap value is 10% on the initial investment. Scrap value is 10%. Is given here, right? Scrap value is 10% on the initial investment. Scrap value is 10%. Right, so these are the information. You can see there are a lot of inputs, right? Lot of inputs. I will decrease the font size so that you can see them all at once. So these are the information. Now, based on these inputs, we should now compute the cash flow prediction. So we say output say year 0, year 1, year 2, year 3, year 4, year 5. Right. Okay, first we put initial investment. Initial investment. Initial investment, year 0, we can take from our input area. This is our initial investment. We can put it like this and make it constant, pressing F4. Okay, and we make it within bracket, right? Yes, minus figures. Minus figures. So this is our initial investment. And it is said this investment will be realized at the end of the project as a scrap. So this is the capital investment you made at the beginning, and scrap value means the value at which you are supposed to dispose your investment at the end of the project. It is said 10% from the initial investment. Initial investment වලින් 10% අපි දන්නවා scrap කියලා. මෙතන positive දාලා change එක කරනවා. මෙතන figure එක අපි positive තියමු. Then අපි equal symbol එකකින් අපි negative කරනවා, right? Then it's convenient. Okay, then 10% scrap value is 10% from the investment. When the investment this multiply on a fiscal multiply scrap rate. So this is scrap. මෙතන බලන්න 12 million තියෙනවා. Separate කරලා අපි අඩු කරමු decimals. 12 million, yes, 120 12 million is 10% is 12 million. Then we have sales income. Sales for the year 0 we don't have sales. For year 1 we have sales. It is said 2024, that means coming months, the first year sale 125,000 times, that is a quantity, times price 450. So we can say sales for the year 1 is equal demand, we make it fixed, multiplied by the price. Price is 400. So this is the right demand for year 1. So when it comes to year 2, it is said, right? When it comes to year 2, it is said demand is going to increase by 5%. Can quantity demand increase by 5%? Quantity එක වැඩි වෙනවා 5% වලින්. In addition price එක වැඩි වෙනවා. Price growth එකක් තියෙනවා 9% වලින්. ඒ කියන්නේ right customers ලගේ quantity demand එකක් වැඩි වෙනවා. අපි විකුණන price එකක් වැඩි වෙනවා. හරි. සාමාන්‍යයෙන් price law එකට අනුව increasing price will result decreasing quantity demand. But due to some other reason, we increase the price annually 9%. Quantity demand also increase by 5%, depending on the nature of the demand elasticity. This could happen. Okay. So how we can predict the next month, next year's salary? Demand. Next year demand equal current demand multiply 1 plus 1 plus 1 plus demand price growth rate 1 plus price growth rate plus multiply 1 plus quantity growth. Make it fix. This also should be make it fix. Also better. So these are the respective sales for the next 5 years. Then we can compute variable cost. Then we can compute what? Sales, variable cost, fixed cost. Then we can compute. So what are the other cash flows? So this is a cash inflow, variable cost is a cash outflow, fixed cost is a cash outflow. In addition, we have corporate tax, it's a cash outflow. In addition, we have tax saving on capital allowance, tax savings on capital allowance. Then we have scrap value. Scrap value we have recognized here, right? So no need to put in, but tax gain, let's say tax on gain or loss of disposal. So this is some concept relating to theory, right? Okay. So you are required to fill these parts, right? May parts එක අපි fill කරන්න ඕන. ළමයි මම ඔයාලට අවස්ථාව දෙනවා as a part of homeworks to fill this. And I will explain this part in our next discussion. Okay, ළමයි දැන් මට session එක නවත්තන්න ඕන. ඊට පස්සේ මේ කොටස මම next session එකේදී කරනවා. මේකදී අන්තිමට අවශ්‍ය වෙන ළමයි first you estimate the cash flows, then finally you can reach to net cash flow. Project එක net cash flows එක මෙන්න මෙතන ගන්නවා යටට. Then we can get the discount rate if you are going to compute the NPV or IRR according to a traditional method. Discount rate can be applied, but hereafter no need to go for that discount rate approach. Directly say NPV directly. You can compute NPV directly, right? Then you can compute IRR. You can compute directly, right? හැබැයි මේ දෙකම compute කරන්න මෙන්න මෙතෙන් දෙන cash flows වලින් අපිට අවුරුදු තියෙනවා, years ටික තියෙනවා. මෙතන තියෙනවා අපේ cash flows ටික, net cash flows ටික. දැන් මෙයාගේ පාත කරගෙන අපි net cash flows දාමු කොහොමද ගන්නෙ? මෙතන sum එක දාමු. මේ ඔප්පු සියල්ලගෙම සම් එක. දැන් මේක මේ අතර දැම්මට පස්සේ අපි calculations ඉවර කළ විට මේක fill කරපස්සේ මේ සියල්ල එනවා. Right? This is the net cash flows provided you provide the required other cash flow items. We have not yet provided the variable cost, fixed cost, corporate tax and tax saving on capital allowances, tax gain or loss on the disposal of scrap. Scrap එක විකුණලා ආපු එක් ප්‍රශ්න සිද්ධාමතල අපි tax ගෙවන්න එපා. We need to pay tax on profit. In addition, we need to pay tax on the gain or loss on sale of scrap value. Then ළමයි මේ 120 මේ investment එක ඒ machines ටික අපි අවුරුදු පාවසන් විකිනවා. 20% depreciation rate එකක් නම් at the end of year 5 මේක fully depreciate වෙනවා. Fully depreciate වෙච්ච asset එකක් 12 million වික්කා කියලා කියන්නේ carrying amount එක 0, received amount එක 12 million. ඒ කියන්නේ මේ entire 12 million ම ළමයි මොකද්ද 12 million ම profit එක disposable profit එකක්. එන යා මත definitely tax එකක් අපිට තියෙනවා. we need to pay tax එකක් තියෙනවා. මොකද tax කොහොමද අපි tax හොයන්නේ? disposable profit එකක් තියෙනවා. disposable profit කොහොමද තමයි හොයන්නේ? මම මෙතන උනන් දාලා පෙන්නන්නම්. හොයන්න gain or loss from disposal of scrap. What do I know? Sales proceeds තියෙනවා කියද්ද sales proceed තියෙනවා අපිට හම්බෙන්නේ දාන්න. හම්බෙනා මේ දාන්න හම්බෙනවනේ. ඒක අඩු වෙනවා මොකද්ද? carrying amount. carrying amount of the assets. carrying amount එක කීයද ළමයි? carrying amount එක කියලා කියන්නේ asset එකේ ඉදිරියට පොත්වල වටිනාකම. කීයද? 0. ඇයි cost එක කීයද? cost එක 12 million 120 million cost එක 120 million cost එක ඒකෙන් depreciation එක ළමයි කීයද? අවුරුද්දකට 5 ගන්න අවුරුදු 5ක් depreciate වෙලා. අවුරුද්දට 20% ගානේ අවුරුදු 5ක් depreciate වුණාම depreciation එක fully depreciate වෙනවා. ඒ කියන්නේ 120 million divided by 5. That gives you annual depreciation, 1 year depreciation, right? That gives you 1 year depreciation. Depreciation per annum is this. 5 year depreciation, අවුරුදු 5ක depreciation නම් මේක multiply කරන්න 5 වලින්. එතකොට depreciation එක 120. එතකොට carrying amount එක කියලා කියන්නේ මොකද්ද? cost minus accumulated depreciation. එනම right? cost minus accumulated depreciation. කොහොමද යන එක වගේ figures තියෙන නේද? right. මෙතන මම දාන්නම් scrap එක 12 million. scrap එක 12 million. ඊට පස්සේ okay right now right මෙතන අපි දාමු cost එක cost the assets 120 මම දාන්නම් this is accumulated depreciation එක this much as a result carrying amount එක කීයද 0 carrying amount of 0. So we can say gain on disposal. How much? 12 million minus 0 this much. එතකොට මම මේක profit ya business එකට මේ මත tax එකක් ගන්න ඕනේ. So accordingly tax on gain තොර අපි loss කියලා යන්න ඕනේ නැහැ. Tax on gain of disposal of scrap. Disposal of assets equal මෙන්න මේ gain එක මත multiply කරන්න. මේක tax payment යන නිසා tax ගෙවන්න ඕන නිසා ළමයි minus මෙන්න මේක gain එක multiplied by the tax rate. Tax rate corporate tax rate is 30%. F4 ගහලා අපි end කරමු. So this much should be paid as tax on disposal on asset. Then for the rest of the items you can fix. You can easily fix variable cost parts. Fixed cost very simple. Fixed cost is equal. Kelima annual fixed cost is expected to be remain constant. So this is your fixed cost. Cost and sorry minus down. You can put it like this. We need to fix right. Fix okay. Then variable cost wala දාන්න පුළුවන් quantity එක පාවිච්චි කරලා variable cost is equal year 1 එකේ quantity එක 4 ගහලා fix කරමු multiply year 1 එකේ variable cost එක 200යි F4 ගාලා fix කරමු එතකොට year 2 එකට යද්දී මෙයා grow වෙනවා කොහොමද multiply 1 plus demand growth rate එක මොකද demand එක වැඩි product unit විකුණනවා ඒ නිසා variable cost එක වැඩි වෙනවා demand growth එක කීයද this much and make it fix and close it and again multiply variable cost growth එක quantity growth එකක් තියෙනවා rupiah cost growth එකක් තියෙනවා like the sales income 1 plus variable cost growth rate එක කීයද this much and make it constant by pressing F4 and close the bracket and save enter. Then you can copy this to other part. Before that, we will incorporate minus figure to represent this as a minus figure, right? Then you can drag it to and copy it to other parts. Right, corporate tax. Corporate tax you can compute the based on profit. Profit is equal what? You can say sum. Profit කියන්නේ sum these two අන්න එකේ sum එක ගන්න ඊට පස්සේ මේ whole එකෙන් මේ සම්පූර්ණ profit එකෙන් වැඩි කරන්න tax rate එක දෙන්න here you have tax rate and make it constant and press enter and make it minus figure by incorporating minus figure at the beginning. Just enter, then you can copy it to other parts like this. Automatic karuna me tax savings on capital allowances. Make ape tax payment එකක් capital allowance මත ළමයි අපිට ආණ්ඩුව the government allows us to deduct our depreciation. Tax saving on depreciation. Capital allowance කියලා කියන ළමයි අපි depreciation compute කරලා නැහැ නේද? Like this, none of these expenses include depreciation because depreciation is a non-cash item. Depreciation can a non-cash item. Non-cash items api incorporate කරන්නේ නැහැ. ඒ cash flows incorporate කරන්නේ නැහැ. ඒතර මේ තියෙන්නේ මේ corporate tax එක compute කරේ cash profit මත. Cash profit මතයි මේක compute කරලා තියෙන්නේ. We have computed tax based on cash profit. But inland revenue allows you to deduct depreciation. Depreciation කීයද මේ තියෙන initial investment depreciation අපි දන්නවා depreciation සමාන annual depreciation කීයද මෙයා බෙදීම අවුරුදු 5 මෙන්න මෙච්චර depreciate කරන අවුරුද්දකට මෙන්න මේ depreciation අඩු කරන්න දෙනවා මේ profit එකේ අපි මේ depreciation අඩු කරේ නැහැ හැබැයි අඩු කරන්න දෙනවා had you deducted this depreciation from your profit would have reduced by the same so your tax would have reduced by this much. Can tax outflow එක reduce වෙනවා කියලා කියන්නේ tax saving එකක් තියෙනවා. So tax saving is considered as a cash inflow. අපි cash inflow එකක් තියෙනවා කොහොමද කොච්චර ප්‍රමාණයක්ද? Annual capital allowance. Annual capital allowance එක කීයද? Annual capital allowance එක අපි ගමු මෙන්න අපේ investment එකකින් annual investment එක මෙන්න මෙයා මත depreciation allowance එකක් දෙනවා, capital allowance එකක් දෙනවා, මෙන්න මේ percentage එක. capital allowance percentage එක තමයි capital investment එකේ මෙන්න මේ percentage. capital allowance this much percentage එකක් දෙනවා අඩු කරන්න ඉඩ දෙනවා. this much ඔන්න එන්ටර් කරලා බලමු දැන් කීයද කියලා. ඔයාලා දන්නවා 24 million. මේක එන්ටර් කරලා බලුවොත් 24 million. 24 million profit එකකින් අඩු කරන්න දෙනවා. Your taxable profit can be reduced. So your taxable profit can be adjusted, right, by deducting this particular 24 million. So මේ 24 million අඩු කළා නම් taxable profit එක drop වෙනවා. එතකොට tax අඩු වෙනවා. tax outflow එක අඩු වෙනවා කියන්නේ tax saving එකක් වෙනවා. එhmenan මේ ඇවිල්ලා capital allowance එක. If you had deducted this depreciation allowance from your profit, your taxable profit would have reduced by the same. So your tax would have reduced by this much times tax rate. මේක මත මේක වැඩි කිරීම tax rate එකකින් tax අඩු වෙනවා. එහෙනම් tax saving එකක් නම් මෙන්න මේ ගානක. ඒක අනෙත් අවුරුදු වලටත් එහෙම සිද්ධ වෙනවා. අපේ රෙෆරන්ස් එකක් වලදී ඇති මෙන්න මෙයා එකක් ගහමු. එන මේ ආකාරයෙන් තවත් රෙෆරන්ස් එකක් this what is this make it constant. Yes, එන්න මේ tax saving එක වෙනවා. දැන් අපේ cash flow is completed. දැන් අපේ cash flow statement හරි. එතකොට ළමයි මේ ගාන මෙතනින් පස්සේ ඕඩරින් ගාන. පැහැදිලිද? ඒ කියන්නේ මේ ගානේ අමාරුම ටික තමයි cash flow estimation. cash flow estimate කරලා පස්සේ මේ ගාන මීට කලින් හදපු මෙන්න මේ වගේ simple ගානක් හා සමානයි. මේ වගේ simple ගානක් හා සමානයි. ඇයි ඒ initial investment එකක් තියෙනවා, net cash flows ටිකක් තියෙනවා. initial investment එක දීලා තියෙනවා, net cash flows ටිකක් දීලා තියෙනවා. then you can easily compute NPV and IRR. Here you have initial investment and future cash flows. So what is the NPV? We'll compute NPV. NPV is equal, everything is computed. NPV is equal, say NPV, go to the formula and go to this dialog box and give the rate inputs data inputs data. This is the cost of capital, this one, then values sola dena ape animate except initial cash outflows api values to mewa dena. Then say okay, taking in without considering initial investment. From this we deduct or we can as minus because we can plus initial investment. This is your NPV. If you want to compute IRR, say IRR, click on this and go to this dialog box, view the values. Very simple. IRR, give all these things. Very simple. And just say enter. You can see project is accepted. Why? There's a positive NPV. Project is accepted. Why? Project return rate is greater than cost of capital. Cost of capital is 15%. Return is 16%. You can expect 15%. Project is 16.3%. So project is accepted. Right? Accepted on addition. The most powerful tool like NPV is NPV condition. NPV If it is greater than or equal 0, then say accepted, accepted, let's say accept, otherwise reject. Close bracket and say enter, accept. That's all, right? Okay, Lamai, thank you very much. We'll meet next week. By the way, Lamai, I will upload your second assignment for 30 marks by this Sunday. This Sunday mama assignment එක දානවා. ඒකට මම ඔයාලගෙන හිතලා දවස් දෙනවා 3ක්. හරි? 3ක් නේ මම Friday වෙනකන් දෙනවා. Friday නේ Thursday වෙනකන්. Sunday upload කරනවා. Thursday වෙනකන් time තියෙනවා. ඔයාලට time අරගෙන assignment එක කරන්න පුළුවන්. මම online real time assignment එක දෙන්නේ අපොද 30 marks. 30 marks you need to have time. You do it genuinely or frankly without copying, or you can discuss your issues, right, with your friends and refer to the note and the recordings. Okay, accordingly 30 marks assignment will be given, will be made uploaded to the LMS coming Sunday evening, right? Next point, we missed one class. Last week we missed due to some problem. I will have an alternative discussion, alternative session. I will let you know what is the date. It will be sometime maybe tomorrow or Sunday. At least if there are 1 or 2 students, it's okay because we can record it and upload, right? So anyway, I will let you know the dates and time of the extra session. But keep in mind, coming Sunday, I will upload the assignment for continuous assessment, that is for 30 marks, maybe based on all this what we have discussed so far, right? Okay, thank you very much. We'll meet next time.